Hey everyone, welcome back to another episode of Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving into something that doesn't show up on a candlestick chart, but absolutely determines whether you win or lose over time. It's not just about your strategy or indicators or how much research you've done. At its core, trading, especially in the fast paced world of digital options, is a psychological game. And the two biggest players in that mental battleground? Greed and fear. If you've ever sat there staring at your screen, finger hovering over the mouse, heart pounding as the timer counts down on your trade, then you already know. The thrill of a win, the pit in your stomach after a loss, the little voice whispering, should I go bigger? Or should I just close now? This episode is for you. In digital options, where the trades are quick and the stakes feel even higher, emotions hit hard and they hit fast. Greed and fear become more than just feelings, they become decision makers. And if you don't learn to manage them, they will manage you. Let's talk about greed first. Greed shows up when you're on a hot streak. You've had a few wins in a row. Your balance is climbing. And suddenly the thought pops up, what if I just double my trade size? Imagine how fast that could scale. This is the voice that convinces you to abandon your plan. You start entering more trades, risk more than you should, ignore warning signs, and justify decisions with a false sense of control. You're chasing profit, not following process. And when greed takes the wheel, it rarely ends well. Then there's fear. Fear creeps in after a loss or during a volatile market. It makes you hesitate on solid setups. You close trades early, too afraid to let them play out. Or worse, you freeze completely. The same voice that said, go big, now whispers, don't even try. Fear convinces you that your strategy is broken after a losing trade. It makes you forget your edge and react based on emotion instead of logic. Sound familiar? Let me tell you a story about Chris, a trader who started with $50 in his digital options account. In a week, he turned it into $300. Solid, steady wins. He followed his plan to a T. Then came the ego boost. He started skipping his checklist. He doubled his trade size, started chasing trades that didn't meet his criteria. When one trade lost, he didn't blink. Nor did he stop after the second. Suddenly, that $300 was down to $150. Now fear kicked in. Desperate to recover, Chris went all in and lost everything. What happened? It wasn't the market. It wasn't bad analysis. It was emotion. First, greed led him off course. Then fear pushed him off a cliff. This story plays out every single day. Scroll through Reddit or any trader's forum, and you'll see it. Different names. Same mistakes. It's not lack of intelligence. It's lack of emotional control. Every trader has a strategy. But when money is on the line, emotions can override logic in a heartbeat. Trade logic is calm, systematic. It's your indicators, your entries and exits, your risk management plan. Emotion is loud, reactive, and almost always wrong. So, how do we shift back into logic when fear or greed start shouting in our heads? First, build a rules-based strategy. Before you enter a single trade, decide everything. Entry point, how much you'll risk, your take profit, your stop loss. Lock it in like a contract. That way, when your emotions flare, you've already made the hard decisions. Second, use a risk calculator. Don't eyeball it. Don't trust your gut. Know exactly how much you're risking and how it impacts your overall balance. Crystalballmarkets.com has built-in risk tools for this, and they're a game changer. Keep your risk per trade between 1 to 2% of your account. That way, even a few losses won't shake your foundation. Next, track not just your trades, but your emotions. Start a trading journal. After every session, ask, what trades did I take? Did I follow my plan? How did I feel before, during, and after? Over time, you'll see patterns. Maybe you notice you overtrade after a win, or you hesitate after a loss. These are emotional habits, and once you see them, you can fix them. Another key move, pause after emotional extremes. Win big. Take a break. Lose big. Walk away. Emotional peaks skew your perception. That's when mistakes happen. Step back, reset, then return to your rules. Also, understand that good trading is kind of boring. It's repetitive, it's methodical. It's not supposed to feel like gambling. So if you find yourself itching for action during slow markets, that's not discipline. That's a dopamine hit you're chasing. Reframe boredom as control. Zoom out too. Don't measure your progress trade by trade. Look at your performance week to week, month to month. This reduces emotional attachment to any one outcome and reinforces long term thinking. Here's the deeper truth: our brains are wired for survival, not success in trading. We're built to avoid pain and chase rewards. That's why, after a loss, we hesitate. It's the fear of more pain. After a win, we get reckless. It's the high of the reward. In digital options, where results are almost instant, this cycle gets amplified and fast. Knowing that gives you power. You're not failing because you feel emotions. You're human, but you have to learn to work with those emotions, not for them. The goal here isn't perfection, it's longevity. It's not about flipping an account overnight or hitting home runs. It's about steady growth, discipline, and staying in the game long enough for your edge to show up. Greed and fear don't disappear, but they get quieter when your plan is strong, your rules are clear, and your focus is on process, not profit. And here's where having the right platform helps. Crystalballmarkets.com isn't just about executing trades. It's about giving you the structure to trade smarter. Use their calculators. Use their tools. Keep your decisions data-driven. Because your emotions may be loud, but your strategy should always be louder. Thanks for tuning in to Financial Market Insights for Traders. If today's episode resonated with you, if you've ever been caught in the loop of overconfidence or hesitation, just know this: you're not alone. But you can get better. One plan, one journal entry, one trade at a time. Until next time, I'm Sophia. Keep your head clear, your trades clean, and your goals long term.